Hey Livingston County, thanks for tuning in. This is our early year predictions here for 2026 and what we think is going to happen for the rest of 2026. Let's dive in. A little bit of a quick fact. Here in Livingston County, the median home price is roughly $380 to $385, and that's substantially higher than the state average. This current state's average is about $245. So that makes the buyers within that average price point that much more competitive when we're talking about buyer pools here in Livingston County. That also does kind of skew things a little bit in terms of product because of supply and demand for when you drop below those numbers. Because your average house these days, for what you're getting for 200, 250 in Livingston County is probably not that much. In certain communities where your dollar is going a lot further, you're getting a little more bang for your buck, whether that's Allen Parks, your Lindens, your Grand Blancs, you drop down to that average price a little more, but your dollar goes so much further. So our inventory level is still very, very low, but from 2020, year over year, we have gained more supply. So in terms of recent 10-year history, in our mind, supply and demand and inventory levels are just not there purely because of buyer demand. And with those lower levels of supplies is stabilizing Livingston County to be more of a seller's market. There are predictions that we're going to see maybe statewide it'll be more balanced from a buyer and a seller market standpoint. But in Livingston County, based on products, supply, buyer demand, our prices are holding very, very firm, and we're still seeing multiple offers in a lot of scenarios. So homes are still selling fast. On average, about 60 days, which in our mind of recent history, we want to see homes close in 15 days, under contract in 24 to 48 hours. That has kind of come and gone, so we're starting to see a little bit more of a normal market when it comes to days on market, which 45 to 90 is very conservative, very average, and very safe. So if we're seeing homes get under contract and close within a 30 to 60 day standpoint, that's fast in all realistic mindset of like what the past has been for real estate, statewide, nationwide, so on and so forth. But we are seeing homes sell within a 60-day period. We are still going through a local seasonal data skew. What I mean by that is Q1 tends to be a little bit slow. We are now into March, so we are starting to see a spring market build. One, buyer demand is definitely building, but we are starting to see an influx of good inventory and inventory nonetheless. I mean, even for us alone, we have 20 pre-listings in the pipeline that can go live and will go live in the next 1 to 16 weeks. And if that's a testament, which we are one of the top 5 agents here in Livingston County, but if that's a testament to other agents in this market, we're going to see a huge influx of inventory here in spring 2026, late March, early April into May. And maybe it's not so much inventory that it's a balanced buyer-seller market, but nonetheless, buyers and your average buyer pool, competition is now distributed onto 10 listings instead of 2 listings. That will help buyers in a lot of scenarios to be more competitive with less buyers. So a little bit of a cap off again of our experience and our listings. We are still seeing multiple offers, highest and best in every single product that we've positioned in 2026 early, January and February, going into March. And why is that? All of our listings and all of our strategy is backed by data, backed by experience, backed by history, and backed by comparables. We want the market to chase us. We don't want to chase the market because most of the time, or statistically speaking, when you chase the market, you will lose. You won't be able to time it perfectly. You want to price it where you're gaining the mass parts of that buyer pool, and now you're seeing that multiple offer size and best, and products are still seeing that. With that being said, too, you need to price it right, but you also need to be right. And I said it once, said 1,000 times, to get top dollar, you have to be top dollar. And whether it's $200,000 or 1.2, to have poor presentation to not meet buyers' expectations, they're going to scroll on by you. A bit of a 2026 local price and trends and forecast. Local real estate professionals are still projecting 3 to 5%, which I tend to kind of be maybe a little more conservative when we're talking to buyers about what the next 1 to 3 years look like. but they are expecting 3 to 5% growth in 2026. If demand holds and inventory remains limited, similar to broader mission expectations, we're going to see that be at the higher end of the spectrum. So here's the perspective that I try to give the buyers. $300,000 price point, 3% of appreciation, 10K, year over year. For us to drive that price point, $5, $10, $15, $20,000, how long do you plan on being on the property? 10 years. You are going to make up that appreciation fast versus waiting, being patient, being conservative. And those are all great things to be. But if you sit on the sidelines not being competitive, I think the appreciation will bite you in the long run. If we see 5% growth in 1 year, 6 months makes a big impact for your appreciation and your equity. I'd rather have that ownership and start to ride that wave. With that being said, the steep double-digit appreciation, 10, 15, 20%, seen in 2021 and 2023, that's gone. We are seeing price increases, and we will continue to see price increases in markets. This year, it's obviously more measured and calculated in that 3 to 5% range. And in some markets, maybe you say 2. In some markets, maybe you see that 8%. But I think 2026, 2027, 2028, we are going to see a very measured and calculated market appreciation, 3 to 5%. And buyers need to take that into consideration of when you do purchase, if you are overpaying or you're being competitive to win products, where that appreciation is going to put you in 1 to 2 years. You're going to make it up pretty fast. And to finalize on that price trend and forecast, I think the appreciation of the equity increase, one, sellers need to take that into consideration for timing of the market. You're not going to time the market, but I mean when you hit the time on the market. Interest rates on the downward trend, limited supply, and buyers getting excited for what appreciation might be 1 to 2 years. Sellers, don't get me wrong. Does your home appreciate in 3 to 5% year over year? Sure. Can you see a $500,000 house go for $550,000 and you make up that appreciation substantially purely based on listing it now? There's such few supply and rates are getting buyers very, very excited. For you to wait for your appreciation, you can make up that growth just by listing it today and saving you all of that time, headache, prolong, presenting it appropriately and in getting it ready for a early spring market. And again, if you wait into the summer, I think the competition limits that ability to drive $50K over list price still. The market balance and buyer and seller conditions, we are kind of shifting a little bit, and we've been shifting over the past 2 years plus or minus. By no means do I think it's a buyer's market. It's still very much so a seller's market with a lot of great seller control. But the products that are overpriced, not presented properly, buyers have a lot to say. And buyers are very particular and adamant on being advocates for themselves in a great way. And I think at the end of the day, buyers are starting to be more vocal of what they need in those transactions, and those where a lot of great opportunities are. Another stat that comes to mind for me is 40% of deals, homes that are listed, get under contract and go through inspection, 40% of them are falling through inspection. That goes back to be top dollar. To get top dollar, you got to be top dollar. So we include pre-listing inspections on all our properties. Why do we do that? We want to know the full DNA, the good, bad, and the ugly of all of those houses that we put our name on, and we want to mitigate problems. And we've done this for years now. And let's take, mold in an attic for example. What could cost you $1,000 to fix early and then disclose it properly and give the proper warranties could cost you $3,000 to $5,000 in the big picture of waiting for that, not knowing about that, and waiting for a buyer to have a conversation with you about that. Being proactive versus reactive in those scenarios will always pay yourself and pay those sellers. I think the only way that we're going to see it truly be a balanced or buyer's market is obviously this influx of supply and demand. Once we break even, we're going to be balanced. Once we have an influx of inventory, that's when buyers are going to have a lot more control in the scenarios. I don't think that Livingston County is going to happen like that. I think that that's happening in markets like Taylor, Allen Park, certain parts of Oakland County, certain parts of Washington County, where we're seeing an influx of inventory. and we're seeing less buyer demand. Florida is a great example of that as well. You know, you scroll through Florida, you're going to see a lot of condos. It doesn't mean that, you know, we're seeing a downturn. That's where we're seeing there's too much inventory for buyer demand. Buyers are gaining a lot more control. This market balance and this market shift, interest rates have a huge impact on that. You know, just being under 6%, we were busy at 8%. We were also busy at 8% after a huge rush and buzz with buyer demand riding that 8% wave up, and we still had some great inventory and great activity. Now we're kind of trending down. Buyers have the short-term memory, and they're thinking about, hey, I want to make sure that I'm capitalizing on the lowest rate possible, but 6% and being south of that has been huge for an influx of buyer excitement and buyer demand, buyer applications, mortgage applications, and getting buyers back into this market, therefore being a great resource for sellers. But it's, again, sellers taking advantage of that. And it really comes down to one thing, you know, there's no perfect time to sell, but if you need to make a transition, we're seeing a lot of transitions this year. People finally selling these northern properties and moving south in some capacity for that long-term retirement plan. So we got a few key local influences that help drive buyer demand for Livingston County. One, our income levels are more in terms of a median standpoint from a Michigan standard. We do have lower taxes, or we're favorable on that front. We're starting to get a lot of Washington County and Oakland County individuals coming here because of both of those things. They are high net worth individuals or high income individuals. They are coming from places with high taxes. Therefore, they start to look at our products in Livingston County and say, wow, I'm not compromising that much on location. I'm 25 to 40 minutes away from these markets that I want to be, but I'm saving so much more money. Limited supply also is supporting our values or keeping them very concrete. And to be fair, even products that aren't presented or priced appropriately. You know, we're starting to see a little bit of more of a lackadaisy approach to agents and sellers listing products in very high price points that are not executed perfectly. And from a supply standpoint, they do have that leverage on that if they're relatively close. Because at the end of the day, fair market value is a range, it's not a number. This house is worth somewhere between 5 and 530. And at the end of the day, if they're listed at 530, at the top end, they might alienate a certain segment of a buyer pool, where at $500,000, you have 100% of your buyer pool. So in short, those key influences, buyer demand is going nowhere. Brighton is only going to continue to be more relevant. Hartland, Howell, and as we continue to develop those areas, buyer demand will only continue to grow up because of low taxes, good convenient locations, and school districts. That will only be a great thing for sellers here in 2026 to position themselves right to get top dollar as fast as possible. So what does this mean for buyers and sellers in 2026? For buyers, the best things to do may come with inventory bumps. Again, when you see 2 houses on the market versus 10, all in similar price points and categories, you're going to see that those 20 buyers diversified on 2 products versus 10 products. So position yourself, be ready, be pre-approved, be prepared, get into homes fast, make offers fast. And with that being said, we're actually seeing homes go off market without highest and best deadlines. So if you're not getting in there within the next 24 to 48 hours of homes hitting the market, you might miss out on opportunities. Be prepared, be ready, be competitive, get rid of contingencies, save as much cash as possible, fix in your terms and be very focused on your terms. So you're making sure that you're winning on paper, you're winning from an agent standpoint, you're winning from a lender standpoint, and you can capitalize on the deals that you want to. For sellers, pricing will continue to rise and should continue to rise moderately. Again, that 3 to 5% and with limited supply and demand. Again, driving those homes hopefully a lot higher because of limited supply. We don't know what's going to happen in the next 3 to 6 months. So I would say if you're going to sell in 2026, I'd sell today. I'd sell mid-March, late March, and be ready and get ready. But with that being said, staging, pricing competitively will matter. It'll be the reason that sellers win and lose. Pricing it right and presenting it right. Because again, we have higher average price points. And for your average buyer to walk into a $700,000 house, there's an expectation for what that quality looks like. The less things they have to do. And if you're executing on that, you will win in any and all of those price points. So homes priced well and market effectively will still sell briskly. and sell very, very fast and for top dollar. But overpricing can lead to longer days on market compared to previous years and will only hurt you moving in through 2026. So here's the bottom line here for Livingston County 2026. Market conditions a little more balanced, slightly seller leaning, not as extreme in 2020 as 2020 and 2023, but still supported of price growth. Price trends, moderate increase, 3 to 5%, not sharp declines. Buyer power incrementally improving with slightly more inventory and stable interest rates. Seller advantage still relevant for well-priced homes, and lack of supply. Hope that helps for our predictions here for 2026 and moving into the future. I think that's a lot of great information to help sellers be very successful and buyers be very successful. If you have any questions whether it comes to selling, buying here in 2026, we are always here to help. Shoot us a call, shoot us a message. And Livingston County, thanks for tuning in. Peace.